UTI Core Equity Fund is a large and a mid-cap fund as per the SEBI classification, which has to invest at least 35% in large cap and 35% in mid cap. However, as part of our asset allocation, we invest around 50 to 55% in large cap, around 35 to 40 in mid cap, and anywhere between 10 to 13% in large cap, depending on the relative valuation and outlook at various points of time. In terms of our overall strategy, we focus on a value oriented strategy with relative value being our core metric. So we typically tend to look at stocks or sectors trending at a decent discount to the longer term valuation, either relative to its own history or to the market. And we also typically tend to look at defensive cyclicals, preferably buying them either at the bottom of the cycle or mid of the cycle, where we believe that the cycle is trending upwards. Largely in case of small caps and also in case of select mid caps, we also focus on growth oriented stories where we believe that stocks could be available at reasonable valuations in the market. In terms of our sectoral outlook, we have an active weight on financials, automobiles, pharma, and IT, while having an underweight on metals and consumers. A strong belief is that we will see a very good domestic recovery, and most of our active weight sectors are premised on this. Our biggest active weight is financials, which comprises a large share of banking sector stocks, where we believe that the sector is headed for a very decent earnings upgrade and an earnings growth based on a strong credit growth cycle as well as a strong credit cycle. We are also positive on automobiles, where we believe that the cycle is very favorable as we are on a 3 year and a 5 year base on both two wheelers as well as PVs and CVs. We also are positive on pharmaceutical sector because the sector is reasonably valued at this point of time, and we also believe that the most of the earning downgrade cycle is over. In terms of our underweight sectors, we are negative on a global oriented sectors of metal, largely because we believe that given the risk of recession, there could be downside on the metal prices. In the last couple of months, we have increased our position in the IT sector. While we believe that there could be challenges on the growth because of the recession, we believe that there's a very strong technology upcycle going on, and the valuations have corrected meaningfully in the last 6 months and are trending in line with the longer term averages. So we have actually added positions in the technology segment. This is being funded by trimming or underweights in both healthcare and chemicals. Overall, we believe that the UTI Core Equity Fund offers a very well diversified, high good quality value portfolio across sectors. And this we also believe that this is a good way to play the growth in the Indian markets. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.